Hello guys, and welcome back for a new video. So today we're gonna talk about the liquidity concept. In the first video about the liquidity concept, we saw the theoretical aspect of the liquidity. We saw how to use the liquidity and what's the purpose of the liquidity. In this video, I will show you the most common models of liquidity. I will explain to you what is buy-side liquidity and what is sell-side liquidity, and after those concepts we will go on the chart to check if we can see some model of liquidity and how to use them in the real market, because it's really important to understand how to use them. They don't have to be used as perfect models, so those models will not work 100% of the time. You have to keep in mind that trading is just probabilities, and it's just a matter of what you can add in confluence to your trade to be in the right side. So to start this video, we are gonna talk about a little bit the retail stuff, because the retail stuff gives us a lot of information about the liquidity in the market. So when you are starting trading and check on YouTube for some video about how to trade the market, how to analyze the market, you will find some video about maybe some support and resistance. So it means that the price is coming to a resistance, and if price breaks, some traders are buying at the break. It means that they are breakout trader, and some traders are waiting for this resistance to become a support to after take a buy after the pullback here. That's the same stuff when you join a broker. When you join a broker, the broker sends into your mailbox some video about retail stuff. It can be support, resistance, it can be indicators, it can be patterns like double top, double bottom, rising wedge, even if what you want. And all of those stuff will give us a lot of information, because those stuff are using by maybe 85 to 90% of the people who are trading the markets. And those things are create the most liquidity that we can use in our strategy to follow the market well. And then now we have some information about the retail stuff, and we are able to see the liquidity common models in the market. So we have first of all the structure. Okay, so below or above each structure in the market, you have resting orders that you have to keep in mind. Okay, so in this kind of structure, this is a structural point, sure, but this is too a liquidity that market can use to fill this move. I use the word can. This is not an obligation for the price to come back here and fill all of this thing. Okay, it's not an obligation for the price. Price, as I told you in the first video, moves from a liquidity pool to another to have a balanced price. And it's really important to keep in mind that price will not every time goes here to take orders and then goes. Okay, you don't have to try to anticipating a sweep of liquidity like that. It's not fair for your trading to waiting for another block here and setting a sell limit just here. It can be used, but it's more riskier than waiting for some entry criteria on those level. You can use a sweep of liquidity, but you don't have to use them as a 100% true aspect. Okay, those things will give you extra confluence with your order block or something like that, but you don't have to use it in middle of nowhere. So as I told you in the first video, so sometimes price will create this kind of structural level, okay, here, and we will see sometimes that the price, after doing this structural high, has a lot of problem to continue its trend. Okay, and that can give to us the information that the price doesn't have the order needed to fill this move. And as we know, above this level and below this one, we have all resting order. It can be the resting order you want. It can be stop loss of sellers. It can be buy stop, and in this side stop loss 2 or sell stop. It's even one you want. And if the price doesn't have the liquidity needed, price will just maybe accumulate here, then goes back, take the resting order and then break. Or price will just break this low, induce people, breakout trader to sell, and maybe pullback traders to take a sell at the pullback. But they don't have the liquidity needed, and they just go upside, takes all of this liquidity before going in the right way. And that's pretty the same way with the equal structure. So the equal structure, you have to keep in mind that is relative equal structure, because sometimes you will find perfect equal highs like that, okay, and sometimes you will find really not perfect equal low, equal high or equal lows too, like that, maybe up. This is not perfect, but this is relative equal structure. And as the same way here, a lot of retail traders are seeing those things as a double top or a double bottom, and sometimes it's mean for retail trader to sell at the neckline here, or to wait for a pullback in the neckline to sell the market. And like the previous structural point, if the market doesn't have the resting or the liquidity needed to pursue its move, price will just take the resting order above this side here and take all of this liquidity before showing the right way. And otherwise, sometimes the price will just follow here, break those low, induce people to sell, and then after comes back, takes the liquidity and fill the move. That's pretty the same way with the double bottom, you know. If price doesn't have the order and the liquidity needed to pursue its move, it will take the equal structure to fill the move. And with the trend line liquidity, you have this liquidity area here, but you know, with this model here, that you have liquidity too on each structural point. So it means that the price can sure sweep all of the trend line, but you have to keep in mind that you have resting orders here. So price can just take the resting order here, take this one, or fill all the trend line to take maybe a one that we have higher, waiting for entry criteria, and then go lower in the market. Those models are very important to understand and to know, okay? It's not because you see an equal highs that the price will automatically come back to fill resting order. No, sometimes price will not have the needed of orders to continue its move, and will just continue its move by following this equal structure. And that's why some retail traders are doing very great with double top. If price was always filling and sweep those kind of pattern will not exist for retail traders, because those kind of pattern will just be bad pattern with no probabilities. Okay, so now we are knowing all of that. Okay, you have to keep in mind with the liquidity concepts that is just the stuff that you can use adding to the rest of the stuff. It's not a stuff that you can just trade with it, you know. You can't know only the liquidity concept and say, okay, I have a trend line, I will wait for the price to break this trend line and then I will sell from nowhere. No, it's not like that it's work. Liquidity is very important in the market because this is everything, but you have to add the liquidity concept with the other concept that I will show you. It will not work if you are using only that in middle of nowhere. So now we know all of that. I will show you what is buy side liquidity and what is sell side liquidity. Okay, now we can go through the buy side and the sell side liquidity. Okay, so we have to keep in mind that we have not only liquidity in the market, we have buy side liquidity and sell side liquidity. What is the buy side liquidity? So to facilitate the stuff, the buy side liquidity is the liquidity that the bank and financial institution will take to sell the market. You know, the bank and financial institution are stacking order until they are ready to leave the zone. Here we can see that the bank and financial institution are staking order. So you know, they buy, they sell, they buy, they sell. Some people are selling there and some people are buying there. And with the buy side liquidity, just here, we will know that when we will take this high here, we will have buy side liquidity. Means by that all of the stop loss of the sellers will become buy order, right? All the breakout trader will take buy stop, and some trader will take the pullback here and take buy limit or buy in the market execution. And all of this will give to us the buy side liquidity needed to sell the market. If you saw the first liquidity video, you know that we need orders needed to rebalance the price and to fill the move. That's the same way here. Bank and financial institution doesn't have the liquidity needed to sell the market. It doesn't have the lot needed to sell the market. So what they do, they create buy lots to be able to sell all of the need. That's the same thing with the sell side liquidity, okay? So the bank and financial institution are staking order until they are able to leave the liquidity area. So here, in the same way as the buy side liquidity, but in reversal, we have staking order here. So we have buyer order here and seller orders here, okay? And when they have the liquidity needed and the lots needed, they break this one, taking all of this resting order, so stop loss, sell stop, sell limit, whenever you want, and after they take the right move, and all the stop loss of the sellers here, who are here, become buyers when the stop loss get touched here. And that's why in this case we have a very strong move after the sweep of the liquidity. It's very important to know that we have buy side and sell side liquidity in the market. You know, I every time on the chart just note my liquidity with X or with $1, but I know in my head if it's buy side liquidity or sell side liquidity, and depending on my structure, I can use it well. So now we know all of this. We will go through the chart to see the most common model and how to use them. Okay guys, for the example I take a chart on GU, okay, so I mark my daily structure to have my swing structure, and I follow the structural H4 structure. Okay, so first of all here, what we have, so we have another block here, caused by the break here, okay, and so here we have a structural point of liquidity, okay, the first structural point here of liquidity, so price makes this and this, and so we have this structural point here. Price sweeps the liquidity, takes a liquidity pool, another block, and continue is downtrend. If I mark all of this up, this is a trend line liquidity, okay, and I can use it as for example here I am in downtrend, okay, and I know that price sweep liquidity to the upside, take another block. I have a lot of liquidity, a trend line liquidity, which is sell side liquidity too, because when the price will break this trend line of liquidity, it will induce people to sell and to continue the trend. I will just mark this a little bit up higher, okay, like that. Okay, perfect. So next here what we can see, we see that the price breaks its structural level here. Okay, we can see here after that we have equal highs just here. Okay, I don't mark all of the stuff to be able to mark some stuff with you. Okay, here we have also another block just above this equal highs. Just here we have this other block who gives us the liquidity pool needed to pursue the move here. Price react to this demand with created by a sweep of liquidity, accumulate orders, takes the buy side liquidity, sweep the structural level of liquidity, and after break here, follow the bearish order flow and continue the move here. As we can see, we have also trend line with sell side liquidity. We are in a bearish trend. We sweep this high, we taps into maybe the 50% of this zone up. We can continue the bearish trend and try to put a new low. Okay, eyes the same way of here. Now we have all of this daily range broke. All of the buyers liquidity that we have here become sellers. That's why we have a big move to the downside. We have many liquidity. We have many liquidity to fill on this leg. We know that we have equal highs here. All of this little liquidity has created a big side of liquidity. Okay, price filled all of this liquidity. Just here, fill all of these equal highs, takes another block, follow the bearish order flow in daily, and I think you saw her, but I will mark it. And here what we had a trend line liquidity with sell side liquidity to take up. Sell side liquidity to take here. You have to understand that the price doesn't like the empty space with between its liquidity pool. So what does that mean? But liquidity pool is the other block, and price doesn't like the empty space between two liquidity pool, supply and demand. So what I mean by that, if price here create empty space, fill the empty space. Price here create empty space, fill the empty space, and break the structure because we are in a bearish trend. Here price creates an empty space, fill the empty space, create empty space, fill the empty space. And in higher time frame, here we can see that price accumulates order, breaking in the wrong direction, taking all of the liquidity, and comes back to follow the trend. In my start with trading, I was doing every time this. I was drawing a triangle between my supply and my demand to see if we have empty space or not. So we'll continue here. So as the same way, okay. Here price accumulates, creates sell side liquidity. We are in a bearish trend, so price don't respect here the sell side liquidity and just break her. Here price up, we'll just delete it because okay. Here price break internal structure, follow the order flow, break internal structure, follow the order flow, and all of this creates liquidity, creates a relative equal high or trendline liquidity if you count the 3 touches. Price then creates structure here, price sweep liquidity, price comes back, creates sell side liquidity here, price breaks to the upside, induce people to buy, then breaks all the sell side liquidity, takes a lower time frame flip zone, and continue the move following his internal structure. Price break here, sorry, price up, creates this other block just here, up, price creates some liquidity here, equal lows, price breaks those equal lows, continue his internal structure. After price, we know that it doesn't like empty space, come back into this decision, this extreme of this level here, just sweep a little bit these equal lows, takes the liquidity on the other block, goes up, make equal here, price creates a little bit retracement here to be able to generate liquidity, and after price fill all of this equal high here, takes the other block, the extreme other block, and continue his bearish trend. So that is the stuff you have to work on your chart, okay? And you have to keep in mind that the price doesn't like the empty space. So here we have another block created by a sweep of liquidity here, just here up, like that. Okay. This other block was powerful in a bearish trend because we sweep all of this liquidity, and after we take all of this buy from this one. So this one is a very powerful one because we sweep all of this daily liquidity and we take all of these buying orders from this pool of liquidity. And if you are checking more larger up, what the stronger order block creates, it creates a relative equal low to fill after. And what happens when price breaks these equal lows? Look at that. Look at this candle, liquidity candle. Here price breaks, takes all the sellers stop loss, who became now buyers. No, sorry. Price takes the buyer stop loss, who became sellers, takes the sell stop orders of the people, and generate all the sell side liquidity here. You have really to understand those concepts and try to apply them to your chart, okay? There is no need to wait for a sweep. So if we are here, for example, we don't see all of this stuff, we don't have absolutely to set a sell limit here and wait for the price to come back. No. If you have your entry criteria in this area, you can enter. If you get stopped, you will know that it's because you have liquidity. You have to generate in your trading system this kind of stuff in your plan that will give you extra confidence. For example, if I take a trade here, I know that my trade will not have as much probabilities than this one, for example. But it doesn't mean that I can't take this one. I can take this one if I have extra confidences and if I can see stuff to fill. So here, for example, we have all of this sell side liquidity to fill. This is a strong move. You know, this is not a move with some structure, then a range of 3 days, then a move, then a structure. Now this is a fast structure, a very rapid structure. So we will fill it. We don't know how, we don't know when, but we will fill it, and we can try to reach this sell side liquidity by taking a sell following the structure in this case. So it's very important for you to understand that, and to understand that price will always make a triangle with your supply and demand zone, and you will always find it into your chart. So I hope, guys, that this video will help you understand more the liquidity in the market, because it's a very it's not the most simple stuff, but it's really an important stuff. It's a really important stuff, and if you use it with all of the different stuff I will show you, you will be able to take a big sweep of liquidity like that and a big risk reward trade. So we are now continuing a little bit. I will show you in this case. Okay, so here we come back, fill sweep all of this liquidity, create another block by the sweep of liquidity, right? And then what we have here, we'll delete that. We know that we have equal highs here, equal highs here. We know that we have a structural a liquidity structure here, and we know that we have a supply above it. So here price is coming back. Okay, it starts to accumulate some orders at the imbalance filling or the daily retracement. Create here sell side liquidity to take maybe after. Price comes back, sell sweep this liquidity, sorry, create a little retracement by sweeping this liquidity, follow is bullish internal order flow. Here after price breaks another time is internal structure, sweeps the structural liquidity point here, react to the order block, it starts to retrace, make an equal here. After price taps into this demand, come back into this level, fails to make a higher high. Okay, after price comes back into his demand, breaks his little liquidity that we have here, the sell side liquidity, fill all of the other block, sweep this structural point, this buy side liquidity here, take this supply chain here and goes down. And it will be, guys, all the time the same stuff. Okay, you have to understand that it will be all the time the same stuff with certain circumstance. Surely it will not be every time the same, but the markets will show you the most common models in the market and you will be able to use them. So guys, I don't want to make a 40-minute video with a 30 minutes of liquidity finding on the chart, so I will let you find some liquidity on the chart. Okay, you can give me your chart, I will analyze them with a pleasure and I will respond to your question with pleasure. I hope this video, guys, helps you understanding more the liquidity and to spot more easily the liquidity. I hope that you understand too the buy side and the sell side liquidity. If you have resting question about this video, feel free to ask me all of them. It will be a pleasure to answer your question, guys. So we will see each other on the next video. Bye bye, guys.